Hi everyone, this is Jen with your Market Minute, and let's look at what is happening right now, shall we? So let's start. More positive economic data was released this week on consumers' buyer demand, interest rates, and new home sales. However, the pace of growth in labor markets has decelerated significantly. New unemployment claims increased last week, and we have seen the improvement slow on preceding weeks. And the weekly MLS data shows that the lack of inventory continues to weigh heavily on both pending and closed transactions. So what does that mean? It means there are buyers out there that aren't really finding the homes that they want because there isn't a lot of homes on the market. Great for sellers, harder for our buyers, but interest rates are still great, so lots of reasons to still stay active in the market. Economically, things were looking up last week with new home sales rising to 2006 levels as interest rates remain near historic lows, with a contract rate that averaged just 2.9% last week. Mortgage applications are still 20% ahead of 2019, which is really good, and this is despite persistently high unemployment and ongoing headwinds owing to the pandemic. Potential home buyers have continued to apply for mortgages at a staggering pace. This is great news. It means people are moving, things are flowing, and we're all in our lives and trying to live it happily, right? Realtors in general, we see consistent improving macro environment with more California realtors seeing their business prospects improve. Listings on the MLS did increase 9.7%, and a percentage of members entering the escrows last week jumped 18.4%. However, we still do not have enough supply to meet the demand. Overall, sales resume a downward trend after a strong week prior. The average daily closed sales dipped to 875 last week. That is 8.4% below where it was in the previous week and represents a third of the past 4 weeks of the number of closed transactions that was falling. Although the 2 to 3 million and 5+ million segments continue to grow, home price below 1 million fell across the subcategories, with professional jobs being impacted much less than lower wage jobs, more available inventory at the top end, and the stock market performing much better than labor markets. The luxury section continues to drive the recovery, actually. So those multi-million-dollar homes, they're moving out there. Listings shaped up to be the market's largest obstacle right now. Despite the fact that homes are selling extremely quickly with no or little discounting, the number of new listings coming onto the MLS each day is declining. Overall, it's been down 7.6% from the week before. The declines were particularly pronounced at the bottom end of the market, but every price segment saw new listings fall except home prices at or above 3 million. So the luxury home market is doing very well. It's a reaction to the low interest rates, although a lot of them don't usually get loans on those types of properties. They're cash, but they've had such a great results in the stock market that those people have cash and they're moving. We continue to remain hopeful here that the worst of the crisis is behind us, but recent evidence also suggests that the road to recovery will be quite long as momentum continues, while the pace of that recovery simultaneously sees the pace decline. So I hope that this information is helpful to you. Overall, what does it all mean? All these numbers and all this information, it means that interest rates are low, buyers want to buy. In certain price ranges, there just isn't enough homes on the market right now. So, that is why it's so important to be aligned with an agent that is out there hunting for you daily. If you're thinking about buying or selling, let me know. Be happy to help you. But we'll see you soon for our next market update.